codes and chart of account. So you are asked to set up nominal codes, but what exactly are you setting up? Let's start from the very beginning. When you are running a business, it's essential to record the day-to-day transaction. If you were to describe these transactions orally, you will use words. And in accounting, such words are called nominal codes. Such nominal codes are reference numbers, which simply indicate what such activities mean for a business. For example, imagine that you are buying a car. What is the effect of such action? You have a debt, a liability, that you will need to pay, and therefore you will incur a cost. In this example, if you had to record this car purchase, you will use two nominal codes, one representing the cost and the other the debt. The nominal codes can be grouped in a list called chart of accounts, and they are organized in categories. There are 5 main categories divided in subcategories themselves. The main categories are assets divided in fixed and current, liabilities divided in short and long term, capital and reserves, sales, and finally cost, divided in purchases, direct expenses, overheads, and taxation. Let's stop for a moment and think. What are assets? Assets are items, material or not, generally owned by a business that can generate money if sold to third parties, such as a laptop. Or an asset is also the physical cash, for example, a bank account or a petty cash. Or an asset is a favorable contracted position, written or not, where the end result is to receive money from the other party, such as a commercial contract with a client to deliver a service or a product. What does it mean, fixed and current asset? Being fixed or being current depends upon the length of time needed to get such money. With fixed assets, they will transform into money usually as a rule of thumb from 12 months onwards from their purchase. Instead, current assets, either they are already liquid or they will become so in a shorter period of time than a year. What are liabilities? Liabilities are instead a commercial contract or simply an agreement between at least 2 parties, where we are the party that receives a service or a product and therefore has to pay. Similarly to fixed and current assets, the differentiation between short and long-term liabilities depends upon the time interval from when we start an agreement with a third party and when we have to pay such business, either within a year or longer. What capital and reserves are? Capital, in simple terms, are the funds that are brought into the business by the owners and or shareholders. Reserves are usually a part of profits generated by the company, business, that is not paid to the owners or shareholders, but is kept in the company for future needs. Sales are very self-explanatory, as well as cost. But within costs, let's quickly clarify between direct expenses and overheads. Overheads are costs that are common to 2 or more parties within a business, for example, 2 or more departments. Vice versa, direct expenses are not common to any departments, are just related to one specific individual, one specific cost center. For example, marketing costs are direct. Rent and light costs are overheads. Knowing what are the main 5 categories and subcategories, we now want to ensure that nominal codes that belong for a category can be easily distinguished from the others. So depending upon the accounting software that you use, you will have a fixed range of numbers that are allocated to each category. For example, in Sage, nominal codes from 0 to 1999 are assets. Nominal codes from 2000 to 2999 are liabilities. Nominal codes from 3000 to 3999 are capital and reserves. Nominal codes from 4000 to 4999 are sales. Nominal codes from 5000 to 9999 are cost. Then within such block, from 5000 to 5999, purchases. 6000 to 6999, direct expenses. 7000 to 8999, overheads. And finally, 9000 to 9999, taxation.